Hello and good morning, ladies and gentlemen. Here with Martin Panev, Chief Account Executive Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. A lot of action this week. Starting with North American markets yesterday, the Dow was 15 points up yesterday. Nasdaq pretty much no movement. The Dixie Dow was severely affected, down to 94.80 from 95.60. Initial jobless claims came out better than the expectations with 3,000. Philadelphia Fed Manufacturing Survey, 14.1 better than the expectations, and CB leading indicator month on month came out slightly negative. USD Loonie 125 pips down yesterday versus the Swissy 145 pips movement down versus the Japanese yen. The US dollar is feeling the effects of the aftermath of the Fed's meeting and projections from midweek, from Wednesday. The Dixie Index is now down to its lowest level for this year, and the dollar is suffering severely. This happens to be good news for the indexes, as we can see that they have been going up since then. In the past 2 days, we've seen 450 pips movement downward on the dollar loonie. And today's CPI data from Canada could help further push the pair. You need to have in mind that the pair is on a major weekly support level currently, so keep an eye on that. Canada, CPI reports all through the afternoon for the European traders, that is. We also have a few speeches from Fed's officials every couple hours. European markets, the European equity indices steadily slid lower throughout the morning in the London session yesterday and continued pretty much the same thing during the afternoon, with the European FTSE Euro First 300 down by 1.24% and the DAX down by 1.80%. In pips, the DAX 30 350 range 150 down, CAC 40 140 range 100 down. Looking for a price correction as well. Swiss PPI, negative, all reports, which was pretty much better than the previous. Mixed data, I should say. The SNB Libor rate unchanged at minus 0.75. The monetary policy decision from the central bank announced earlier during the session that it will maintain its current monetary policy. So the target range of the Libor rate is still between minus 1.25 and minus 0.25, with the median target rate at minus 0.75. The interest rate on sight deposit is also maintaining at minus 0.75. The bank downgraded its inflation forecasts and also its GDP forecasts simply because low global inflation levels, and also the projections for the GDP were revised by 0.25 simply because there's a more modest pace in global economic growth. They also, of course, repeated that the Swissy is still significantly overvalued and that the central bank in Switzerland will remain active on the foreign exchange market in order to influence exchange rate developments when necessary. The Eurozone trade balance reports came out yesterday, quite better than the expectations. We also saw final HICP year-on-year, no revision there, and final core HICP reports revised higher to 0.8% versus a revision of 0.7%. which was the expectations. Mr. Draghi also mentioned signs of economic improvement in its testimony in Brussels yesterday. The euro currency is with third trading day in gains versus the Aussie, the Kiwi, the pound, the yen, the Swiss franc, and the Canadian dollars, with 200 pips and ranging of 250 over the last 2 days. That's versus the loonie. Labor cost reports for the last quarter of the year are due any moment now. Next week, we are going to look at the Markit PMI reports on manufacturing services and composite for all European major economies and also the European zone in total. On Thursday, the most important report, the Targeted LTRO. Keep an eye on that. UK markets, yesterday, interest rate decision unchanged. Bank of England asset purchase facility as expected. Super Thursday. Sterling jumped with 1.6% versus the dollar. This was its biggest jump since 2009. The upward move was provoked by the dismissal of the speculation that the BOE may follow the general trend of lowering borrowing costs. Mark Carney was adamant that the interest rate will remain unchanged and the next move will most likely be up. So the FTSE 100 gained almost 20 points yesterday, closed at 6,211. The 10-year gilt yields closed at 1.45%. The cable, 220 pips up yesterday, 270 range, sideways movement today, versus the yen, 50 pips up, 260 range, sideways today, versus the Aussie, 45 pips up yesterday, 330 range, sideways today, versus the Loonie, 115 pips up yesterday, almost 400 pips range, versus the Kiwi, 33 pips up yesterday, 300 pips range, and versus the Swiss franc, 70 pips up yesterday, 145 pips range. All of those pairs are pretty much indecisive, moving sideways today. Asian markets, the Nikkei 225, 215 pips down yesterday from 280, and in addition already during the night. The Bank of Japan modified its negative interest rate policy this week by including money reserve funds and the doubling of the size of the loan support program borrowings in the macro add-on balance. The yen pared its advance toward the highest level since October 2014, amid speculation that the Bank of Japan might intervene to arrest gains that threaten the undermine almost 3 years of a monetary stimulus program. The document revealed that the Bank of Japan Governor Kuroda and his team were presented two options by their staff: more asset buying or implement negative interest rate policy. 5 out of 9 said yes to the option, citing that it would give them more policy tools to help combat the deflationary mindset. Meanwhile, 4 board members doubt its impact and said no. Apparently, they were worried that it would communicate to the markets that the BOJ is running out of bullets. More stimulus from China. Another big event. The central bank got some attention today for downgrading the USD yuan prices. Basically, this was another 110 billion yuan worth of 7-day reverse repos to the markets. Not much reaction for the major currency though. Today, China set its currency 0.52% stronger against the dollar. And the yuan's steepest one-day fixing increase since November, reflecting the board weaknesses in dollar after the US Federal Reserve moved to, I should say, rather dovish tone this week. Commodities, the S&P 500 index had a range of 31 points at 2038, which is still going down. Natural gas storage exchange yesterday declined by just 1 billion British thermal units compared to expectations of 2. Gold had a range of $17. The price currently is about $12.65. Silver had a range of 50 cents up to 16.12. And the WTI had $2 range up to 40.20, which is the current price. Natural gas 190 and a range of 12 cents yesterday. One report is the Baker Hughes oil rig count later on this afternoon. That was all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.